Welcome back, everyone, to Vox Markets. My name is Paul Hill. I'm delighted again to be able to speak to Adam Hill, CEO of Oncimmune, a leading global immunodiagnostics firm. So welcome, Adam.
Good to speak to you again, Paul.
Yeah, well, lots been happening since we last spoke, not least today's inline FY22 results and positive start to FY23. Indeed, the sales seem to have exceeding the last 6 months than they were in the previous 15. So obviously, there's been a big uptick in sort of like the top lines. Maybe we can start there. What's been sort of driving that growth?
Well, I think if we start with last year, we're all very aware that that segments of the market have suffered, and I think the biotech market has suffered substantially, principally in the US, but also in Europe. And a number of our customers are biotechs, and that has had a knock-on effect. And so, I think globally, last year was challenging. There's no doubt about it. But this year, not only are our pharma customers, many of whom are now under master service agreement or have a preferred supplier agreement in place, ordering. In fact, there was a flurry of contracts going into the Christmas period, as we have typically seen year upon year. So that's a good sign. But also our biotech customers are coming roaring back, and so I think there are signs of life in that sector starting to bounce. And certainly at the JP Morgan conference, which I attended at the beginning of January, as does most of the life science sector, there was a lot of enthusiasm and positivity around that segment of the market coming back strong, particularly in H2. So I think we're starting to see lead indicators of that.
Good. And is it you see it is it the States? Is it North America rather than Europe, or is it everywhere across the globe?
I think it is everywhere. Clearly, there are a number of listed biotechs on NASDAQ.
Yeah.
I think by last count, there's something like 150 life science companies currently trading under cash on
you're right.
So that of course makes it very obvious and transparent, albeit that I think the sector's probably suffered as well in Europe equally. But as I said, I think now things are starting to come back, and often, as biotech stocks are a lead indicator for everything else that happens in the market.
Yeah, just for investors, I mean, I had noticed there's been a pickup actually of M&A or interest in biotech because the valuations are so low. But just in terms of the sort of the outlook for the rest of the year, I mean, you put in the statement this morning that sales in the first half were above the previous 15, which I think was 3.8 million. So there must be there. Now you must be that must give you a pretty good position actually to hit your 7.5 million on for the full year target, because if you just times, even I can do the maths, times 3.8 by 2, you get 7.6. So you must be good momentum there.
Yeah, I think so. And, that momentum will continue to build, I believe, as we deliver against these contracts and recognize the revenue that's already been sold. And of course, if we look back over the last 3 years, tend to find that in December, we get a flurry of activity, and sort of in March, April also, we get a flurry of activity as people get back into the year. Many of these pharma companies and biotechs are calendar financial years. They understand what budget they've got, and they start spending. And so I anticipate that there'll be more sales of contracts in the spring, which gives us, of course, the summer to deliver against them.
Good. And then sort of right sizing the business, it seems as though you're going to be broadly EBITDA neutral for the full year, and also, hopefully sort of like, cash flow neutral, or even perhaps cash flow positive for the year. So is it sort of, interpretation for investors as sort of 7.5 is your break even level? Anything above that?
It's around about there, and everything above that is, of course,
good profit.
Good profit.
Yeah, and what is the sort of the profitability of that Immuno Insights business? Is sort of the gross margin?
So it's north of 80%.
Right. Okay.
So it's a high gross margin business, and equally on the early CDT business, that's a very highly profitable business also. And so whilst the operating costs can be in these types of businesses high, of course it's a knowledge intensive consultative sell. As you say, as soon as you tick over those operating costs, then it becomes a very, very attractive business.
Yeah, and I would highlight to investors in terms of, I think the historical, I know I've chatted about it before, the amount of investment made into that sort of the Oncimmune Insights platform and your CDT is roughly, well, the market cap currently of the company is 30 million. It's well over twice that, isn't it? You put into the valuation, and that's really, I mean, when you get I'm just a layman here, but when you get the best quality large sort of the world's largest biopharma firms utilizing that service, it means there is value there, because they wouldn't rely on their R&D on a company unless they thought it was really beneficial, I'm guessing.
That's right. And look, I mean, I think there's various different stages to the relationship as the relationship matures. Certainly, getting them to purchase in the first instance, as a new customer is a challenge. We talk about sort of 12 to 18 month sales cycles, but getting them to then re-up and re-up again, and then think, well, look, it's likely we're going to be doing more work with this company in the next couple of years. Let's put in place a master service agreement. Of course, that incurs cost, because typically they then look to audit our laboratory facilities, our ability to manage pseudonymized patient data, so on and so forth. And so I think with each step, we are deepening our relationship, and of course the reliance upon the services that we provide to many of these pharma customers. And to remind your listeners, we now are working with 7, 8, 9 maybe of the top 15 pharma companies by revenue, and as I said, 5 of them are on master service agreements.
Fabulous. And then can you just remind us in terms of the sort of investment, because I think it was you upskilled the facility in Dortmund last year, and presumably you've got a lot of capacity to grow into still. Yeah,
we've got an awful lot, and look, we're nowhere near reaching a ceiling there. The capacity is, roughly 30,000 tests a year, and if you anticipate us charging about €1,000 a test, you can see that we're substantially off of that capacity. But of course, the pipeline needs to match that capacity, and that's the job at hand and the task that we're currently engaged in. The market's certainly there. For us, it's not easy to access this market. Of course, that tells you 2 things. Firstly, sort of building sales is both resource intensive and knowledge intensive, but equally, once you're selling, you become quite sticky.
Can you just update our investors on the early CDT? Because I did notice now you've got 2 of the largest, well, the biggest 4 CT OEMs. You've got Philips and Siemens interested in utilizing the results from that blood test, the early lung cancer blood test, into their sort of patient management systems.
That's right. And so this is maybe an obvious maturation of this market. Of course, you have the imaging equipment manufacturers, the CT and MRI manufacturers, such as Siemens and Philips, who are starting to develop more intelligent ways of analyzing the images that they are creating with their kit, and are using software tools and data science tools, AI and the like, to improve the diagnostic accuracy of those bits of kit. And of course, those that have other diagnostic approaches, such as blood tests, and we would certainly fall into this camp, that are looking to diagnose the same conditions. And so it makes a lot of sense to start to think about the combination of those approaches to not only improve the diagnostic performance, but also improve the uptake of these things. Of course, I always say there's no point in having a fantastic mousetrap if you don't put it in the corner of a room where the mouse is going to run, right? And you can't have a CT scanner in the tenement blocks of Glasgow, but you could of course have a blood test that can be performed in your kitchen at your kitchen sink, on a piece of card as a dry blood spot, put in the post and sent back to a laboratory. And so I think the reality is, in as this world evolves, that there's not going to be a one size fits all And it's great to see that that other companies are feeling the same also.
Yeah, no, I would agree. Now, just moving on to sort of the funding side, sort of the last piece of the jigsaw, I guess, is the business is obviously in good shape. It's growing at the top line, and we can see light at the end of the tunnel when we're going to get sort of like, cash flow positive, hopefully in next year. And then just sort of right sizing the sort of the net debt in the business. What's sort of the plans and the overall strategy there?
So we're looking at ways in which we can continue to focus the business on our core strategy. It's not the first time that many of your customers will have heard us talk about a focus on pharma services as a future for this business. And so we are looking at non-core assets within our portfolio, of which there are a number, and ways in which those non-core assets can be used to accelerate the growth of that strategy. So we feel that there is an opportunity in that process, of course, to minimize the impact of debt moving forward. We also feel that there is an opportunity beyond minimizing the impact of that debt to put additional capital on the balance sheet, which of course can be used to further accelerate the growth of our Immunoinsights business. And so we are pursuing in the near term a number of opportunities in that space.
And what sort of time counts? If we're talking like 3 or 4 months or so, that's sort of the
Yeah, I think certainly this financial year we are looking to have a business that is a lot more focused than it currently is. And of course, with our current debt provider, who has been incredibly supportive of our business, we've been on a journey together for the last 3.5 or so years. We're in constant conversation about how we might be able to evolve that relationship over the next couple of months.
Good. Okay. And then just finally, I guess, is sort of is it news flow? You've just obviously put out your final results and you've had your AGM, so I guess it's going to be relatively quiet unless you've got some sort of big contracts and stuff like that. But how should investors think about sort of news flow for the next couple of months?
Yeah, certainly. I think there's a couple of chunky contracts that we're wrestling to ground at the moment. In some instances, we've been wrestling for a little bit of time, and there are events outside of our control that have needed to happen, largely to do with the pharma companies and their clinical trials, before we're able to progress our work with them, and those events have now happened. So I think certainly throughout the spring, we're going to start to see more contracts being sold to some of those big names that are current customers, and that to be fairly substantial revenue. I think the other interesting dynamic that we're going to see is an evolution beyond doing the first project in a trial to then validating the signal that we find from the first project in the same trial to now productizing that signal. And it's that third step. We've done plenty of the second steps, but that third step that I think we're going to start to see as well this financial year. Again, and for your listeners, that really is just further validation that we're continuing to deepen the nature of our relationship with many of our pharma customers.
And when you say productize that final stage, you actually mean creating a diagnostic that will go, say, I don't know, a companion drug or something out into the field?
Yeah, I think there's a number of different ways that those products can be used. And I think in the first instance, to not get ahead of ourselves, that product's likely to be used in a phase 3 clinical trial.
Right, okay.
Maybe it's picking the right patients for those phase 3 clinical trials. But we've gone beyond, is there something of interest potentially? Can we validate that there's something of interest? Yes, there is something of interest. And can we then put that into a product now and use it in a clinical trial environment? Of course, a step beyond that might be that if it demonstrates real utility in that phase 3, that it is used and licensed with the drug. Of course, that's the holy grail, right? I mean, there's a lot larger companies than ours that have been pursuing this idea of companion or complementary diagnostics for some time, and with limited success, but there are some real successes out there. So we're on that journey.
Brilliant. Okay, well, all systems go then. So thanks very much, Adam, and look forward in touching base in the next few months.
Good to speak to you.